All right, welcome everyone. Welcome to the Hurley Investments commentary for February the 3rd. We've gotten through our first month of the year, but really quickly, for those of you who I'm sure have seen what happened today in our markets. What's going on? What happened today in our markets that caused us to open up down over 2%, came to break even, down 1%, and finished down a negative 0.42. Someone tell me what's going on, and please do it with as little four-letter words as you can use. I know how tempting it is to be like, son of a gun, that's bleepity bleep is all you're going to say. But actually, we were down today as negative 0.76. So, easy to say, right? Tariff talks dropped the market negative 0.76. And Tanya's there. Figured it out. Hi, everyone. So thank goodness. Tanya, way to be able to figure it out, and she's in typing to us. So perfect. Good to see. Now, I don't know if you've noticed already, but the tariff scare was for just a day. Pre-market is actually up 0.46. So chances are anything that we lost today, we're going to make up tomorrow. And it's interesting because obviously Trump is doing what he said he was going to do. And Tanya Abraham just said, hi to Tanya in tomorrow's market. Maybe a dead cat bounce, maybe, but remember, tomorrow tomorrow would be the buy-in day for the first of the month with new money. And the short answer is yes. Someone sold Meta, Facebook, today for a $21 loss. Could have been 25, but I'm sure they felt pretty frustrated when they're like, you know what? I'm going to sell Meta. And a half hour later, Meta's up $10. It's just like, never, ever freak out that first hour that the market's open. Maud asks, why wouldn't today be a buy-in day? Usually it's the first day of the month. Companies put new money to work in their funds and so forth. But usually if it is a down day, they will wait until that first up day that you have in that first week. So typically the first day of the month, first trading day of the month, fund money comes in. But the neat thing is they don't always have to put it right to work. And a lot of times they'll sit on it unless they're a money maker. So it'll be interesting to see if that money comes in. We'd be looking for an above average day, volume day. And some people are going to say, well, Kevin, wasn't today an above average volume day? It was in Meta. It was not really an Apple. It was just an average day in Apple. On Baidu, it was a below average day. And Disney, which was up today, really good to see one of our stocks that was up today, was an below average volume day. So the short answer is it didn't look like new money came in today. It just didn't. As we sat through last night talking with Keith and looking at today, we felt pretty comfortable with what had protection on and what didn't. And the short answer is today, and it's only today, when the market was down a negative 1.02, we were up a positive 0.30. A couple of things that brought that to happen. One of those things was Apple. Pretty neat when you have a day. And for those of you that have Apple, make sure you're taking a look at this one. It's pretty neat when you have a sucker of a day on Apple, down almost $8 by a penny, and it was down $24,769. But someone tell me, what does our protection add up to be? What does our protection add up to be in Apple? Kind of neat because we're down $24,769. But if you add 18,677.5 plus 84.32, if you add up your protection today made up $27,109.50. Pretty darn neat on a stock today that lost 3.39% to be up roughly, $2,500, $2,450. Pretty neat to see the protection making up more than the stock lost. And a couple of you asked, okay, Kevin, how did you know? And again, all I told you was this is the worst quarter that Apple has. In fact, if we can take a look at a chart, Apple almost told us what it was going to do and why it was going to do it. We have Apple, and it basically has already showed us, hey, it has some support. This is probably where Apple has tens of billions of dollars to buy their own shares. Apple historically has a great quarter. Christmas quarter, they make more money than basically anybody but God himself. If you look at the earnings, $2.40 versus $2.35 estimated. Revenue is only $124.30 billion, beating the estimate of 124.12 by what, $180 million. But iPhone revenue came in low, 69.14 billion versus 71.03 estimated. Oh, they missed iPhone revenue by almost $1 billion. But the Mac revenue over Christmas was $1 billion more. iPad revenue, $700 million more. Other products, kind of in line, off by about 250 million. Services, though, up by 300 million. Gross margin, they made 0.4% more money on everything they sold. Low to mid single digit growth on an annual basis. They always aim low. I kind of giggled because, yes, they did go up to, geez, what was it, 150? After earnings, they went up. I had a couple people tell me on earnings, even though it was down, why didn't we sell off our protection? This is called knowing your stocks. The first quarter for Apple always sucks. They crammed everything into Christmas. They're behind on inventory. They're trying to fill orders that they counted for the previous quarter. No one really buys too many iPhones the first quarter. It's their rebalancing, recouping quarter. Why would you sell off protection when the initial first hour jerk reaction after their earnings was running up to $247.19? This same person sold Meta today when it was down $21, and it finished the day $8.28 up, I believe. Stop trading in the first hour that the market opens. Know your stocks. You should know. Apple has a hard time holding its gains the first quarter. You should pay attention to the person that does these webinars. Boy, I'm sorry you sold Apple protection for a loss. If you had held it through Friday and held it today, it would have made up 3/4 what you lost on the stock. If you added a short call today, you would have made up more on the stock in the 2 days. And the $20 drop, you would have made more than maybe that has lost. Well, that's not true. You would have made up probably in that 85 to 90% range of the drop of Apple. You'll also notice, it's pretty interesting. Kevin, I thought you showed us like 3,000 shares the other day. Well, we did. But we added another 100 shares. With the little drop 2 weeks ago, 3 weeks ago, we had protection on at 245. We took it off at 220, 221, I think, actually. 221 and change, almost 222. We had enough money to buy more shares. We added another 100 shares to this particular account, 100% paid for by that protection on the way down. Now, it's interesting because we have some newer people here. We do not always make dollar for dollar on the way down what stocks lose. On NVIDIA right now, NVIDIA is pretty close to being at that low where it bounced last time and ran up to 145. We only have short calls on NVIDIA. Yes, today NVIDIA lost on 700 shares, it lost 2,387 cents. We made up today $1,137.50. Roughly half of the downward movement, almost, we made up with some short calls today. If we had Micron, we took off protection on Micron at $90. Added some more shares to Micron. Micron was our big loser today. trading at $90.56. So we're still up on Micron net from where we took our protection off by 56 cents. Google has their earnings coming up. Google has their earnings tomorrow, actually. Yes, we had protection up at 200. It's actually slightly out of the money. A lot of you have asked me, Kevin, I thought if you had Google trading at, between $202.98 and $203, we're just going to say 203. Why wouldn't you protect Google at the money? Well, we put this one on a couple weeks ago. And we're hedging that Google's going to go up to the upside. So instead of losing $1.70 to protect $3 higher, which again makes sense, right? Lose $1.70, but to get to protect $3 higher, we're hedging that Google is going to beat their earnings significantly because they normally do. We're also doing the same thing with Disney. Disney's protect lower than the $114 it's trading at. I think Disney's only protected at 112 today. We're going to be slightly out of the money for protection on Google and Disney. The question is why? Why are you not going to protect it like you did Apple? Well, typically Google and Disney run and have really good earnings this quarter. This is one of Google's and Disney's best quarters. Well, Kevin, Disney, what's going on? Yes, it'll still come down to Disney's Disney Plus orders and how many subscribers they have, but they are pulling in $2 billion movies last quarter. And Moana 2 was a surprise. Do I think Disney's going to beat handily top and bottom line? I do. Will they be judged on their earnings per share and their future growth? Or will they be judged like Apple, where you just have to find one point to pick on them? I'm hoping they get judged on their, obviously, earnings and revenue. If they are getting judged on their subscribers, then it might be a little difficult for Disney. And I probably should have protected them at the money. But for Disney and Google reports tomorrow, Disney on Wednesday. Plain and simple, Google and Disney have protection out of the money, which is another way of saying slightly, you can tell I still have problems with this T, slightly lower than the stock is currently trading. We're running the risk that it's just going to go higher. We are bullish on those two stocks. We don't want to spend money or lose money on protection when we feel we can protect it okay from where it's at. All right, there's our list of the watch list stocks that we have. Basically this month, AMD, Google, Disney, Ford. Those are the ones that will have earnings coming up this week. Amazon's on Thursday. We don't trade Amazon. We actually are no longer trading Under Armour either. But Under Armour does report on Friday. Nope, they report on Thursday. All right, going to the big picture. The big picture was pretty interesting. All they're saying is this. The first 100 days, all bets are off on what the market's going to do. Again, we've talked about inflation. Egg inflation is not because of the new presidency. It technically maybe it's based on the old presidency, but the reality is egg inflation is based on the ovarian flu. And to counteract that, the last presidency killed 100 million chickens. But that's what you do. If your chicken gets ovarian flu and starts to die, coughs, has mucus coming out of it, you put it down, you burn it, you don't let it affect the other chickens. That is something that happened before tariffs. Gas, before tariffs. Interest rates, before tariffs. Please don't have cyclical or cycle inflation that comes around. Please don't think that is a tariff related increase. Certain things go up, certain things go down. Natural gas goes up right now. It's what people use to heat their homes. Electricity goes up in summer. That's what we use to cool our homes. That is not inflation. Do I think that tariffs cause inflation? The short answer is I think it can. But inflation right now will not be based on the next 100 days, is not because the Fed didn't cut. It's typical inflation that's occurred from things in the past. It will work its way through the system. And I had to giggle. I had to giggle to think that both Mexico and Canada came to the table enough today. As soon as they saw, yep, Tuesday tariffs come, it's one of those 12th hour kind of things again. I don't know why anyone was surprised. We see it in our budget when we try to balance our budget. There are a lot of 12th hour, oh, the Republican, we can't be the cause of a shutdown in the government, or the Democrats. Well, we didn't shut down the government. We came to the table and negotiated. It was one of those 12th hour things that happened. It was really neat to see how in the 12th hour, both Mexico and Canada came to the table. In fact, if you do your research, and I don't know how I feel about it, but all of a sudden Mexico caught one of the big cartel chiefs and arrested him today. I don't know if that was staged. I don't know if they can get after those guys. I just found it a little interesting and funny that all of a sudden they came to the table and said, hey, we arrested this guy, we'll extradite him to the United States. You can punish him there. Really interesting to see that. All right, here we go. How are markets end this week? I'm going to go lower. I went higher last week. Pretty sure I was wrong. Nope, I was right last week, so shockingly. But I'm going to go lower for this week. And the reason why is because we have to take a look at these charts, but we have to make just a couple changes on them so we can see what's really happening. So let me move this out. And let's change it to a 3-month chart. All right, on the S&P 500, on the RSI median line, we have it at 49.60. It is the medium, and it's going to be bouncing a little bit higher. We stopped right on the pivot point today. We have a pivot point sitting at, well, actually, you can't see it. It hasn't been created. We have last month's pivot point sitting right at 60.50, and we finished just below it. It's got to be 6,000. Huh. But we finished at 5,994.57. And we're just looking at crossovers right here. We know we're going to have an update tomorrow. The question is, will it move the S&P 500 bullish? Kevin, are you going to spend time on the Dow? I'm not. The Dow is just a TV, not important index. We're not looking at it like we're supposed to. Good point, Russ. I'm going to hit that in a second. I need to block the pop-up windows for this son of a gun. Okay, looking at NASDAQ. The NASDAQ, a little bit worse. It finished at 46.35, quite a bit lower than the 50-day median line. We went up and touched the 50-day. 50-day sat at 19,551. Missed it by 50 points for the high today, but came up to it, came back down. Will probably be a little bit hard to get over the 50-day simple moving average. We have a crossover. We will have a crossover. We have a crossover. Technically, the NASDAQ is bearish. Could Google and Amazon change that? Maybe. But it's going to be fighting Tesla and Netflix. Not Meta, but it'll fight Apple. The bellwethers are pretty much fighting each other right now. So the Dow is still bullish. I'm not paying any attention to it. No one cares about 31 stocks. The S&P 500. The S&P 500. Not quite technically bearish, close. Still bullish, could get a bounce, but it's close. And then if you take a look at the NASDAQ, as we just said, it was bullish last week. But we have to call the NASDAQ as technically bearish as of right now. So the Dow 31 pick stocks bullish, S&P is flat on neither net technically bullish or bearish. It's called a mixed market. We have mixed signals right now. 2 out of 3 indicators dictate the S&P is going to be bearish. The NASDAQ is definitely bearish. Mixed bunch on our indexes. My guess for February, it wouldn't surprise me to see the market down roughly 1%. And again, as I showed you last month, my original, hey, we're going to be up 2.4, we're going to be down 2, we're going to be up. It was wild. It was wild. The volatility is pretty hard to understand with the fear of the unknown. The fear of the unknown is the new administration. And talk about shaking things up, not helpful for our stock markets. I kind of hope if they like to shake it up, it also affects them to a certain degree on their own portfolios. Really, I found it interesting. Canada is going to tax, not tax, they're going to tariff Elon Musk's Teslas 100%. Amazing how quickly all of a sudden we're becoming friends and we're going to make things all right. If you don't think that there's some political pull for our representatives, then your head's in the sand. You've got to expect it. All right, earnings this week. It's a lot like last week. I think we have over 100 S&P 500. We had Clorox, Plantier today. Both did really good earnings. I don't know what Rambus was. Tomorrow we've got some big names coming up. Cummins, Merck, PayPal, Pepsi, Pfizer, UBS, A&D for chips, Amgen, Electronic Arts, Juniper, Mattel, Snap. We're going to pay attention to AMD and to Google. Wednesday, HOG, which is Harley Davidson. ODFL, that's the Old Dominion. We do pay attention to energies. Uber, Yum, Allstate, MetLife, Disney, and Ford. Thursday, Bristol Myers, ConocoPhillips, Eli Lilly, Hilton, Tapestry, Under Armour, GoPro, Amazon. We have some big bellwethers again still reporting this week. It'll be interesting to see how things shake up. For our economic reports, pretty amazing. The ISM Manufacturing Index came in at 50.9, which shows expansion again. Our manufacturing was expanding in December. In January. That is rather unusual. In December, it always expands because we've spent all this money for Christmas. In December, it usually contracts. It was supposed to be a contraction of 49.1. Anything less than 50 is showing contraction. Well, it was expanding. It was at 50.9. More manufacturing was occurring than we typically see historically in January. Construction spending came in at 0.5 versus a 0.2. 1.5 times higher than what was expected. Pretty good construction spending number. Wednesday, the ADP employment, ISM services. Really, our average work week reports are coming on Friday. That will be one that'll make or break it. Consumer credit. Someone asked, why are we in some of those consumer credit stocks like Visa, like MasterCard? Right now, it seems like the banks are safer because we have retail customers over $1 trillion in debt. Talk about acting like the government. There will be a better buying opportunity as the credit card companies, the consumer lending is stretched right now, to say the least. We're trying to not gamble. We don't gamble with your money. So fundamentally, we're not in a Visa or a MasterCard because the numbers don't make sense. They don't add up. How are we looking to trade? We're still protecting for Q4 earnings. I've got information on the tariffs that were put on Mexico, Canada, and China. As of right now, China are the only ones that are going into effect tomorrow. That's why we put protection on Baidu today. Apple shares, if you want to read through Apple's amazing quarter. I thought it was funny. They kind of bashed Apple because instead of like $32 billion of free cash flow they put in their coffers, it was only 28, which was, what a bummer. Can you imagine? They only put $28 billion of free cash flow into their company's bank account. Hey, we made all this profit. What are we going to do with it? Let's go stick it in the bank account because we're doing good. Oh, but it wasn't 32 or 33. What a bummer, right? I found a very interesting article on fractional hiring. And I found this interesting because I have a friend who is a CEO through a project. And I sat there, I'm like, William, what do you mean? What are you doing? He's like, oh my gosh, Kevin, I'm going to get paid for like 2.5 years of work to follow a 9-month project along and get it done. And I found it interesting because, in essence, we have something called fractional hiring, where people since COVID are getting hired for certain skill sets they have to be like a part-time CEO, a part-time CFO, a part-time this, a part-time that, to whatever the skill set meets, and they're getting paid ridiculously well. We worried about CFOs making all these millions and millions of dollars. I know of a fractional CEO or CFO. I'm actually not sure what he is, but he's following this through. He'll make $1.5 million for a 9-month project. So in essence, he's just needed to close the deal and to start the process. They'll pay him out over the next 1.5 years. He can go find other jobs. So he makes a pretty good CEO, CFO salary for a small business. Closing this big deal, we'll get paid the next 1.5 years. Basically, working 9 months, making 2.5 times a yearly salary for a medium to small business size upper management position. Shocking, but I found it pretty interesting. So I just put this article in here for you guys to read. Last one, an environment favorable to bonds. You guys know I'm not a fan of Vanguard. And right now, Vanguard is pushing bonds just like they did last year, just like they did the year before. Why would someone be pushing bonds in 20% up years when it's a capped profit opportunity, and the better commission bonds are not the tax-free ones that are in your best interest. They're not the deferred tax ones that are in your best interest. I don't know how many times I have to tell you, because Vanguard appears to be the lowest costing mutual fund manager out there, bond fund manager out there, please don't think they give a crap about your money at all, because they don't. They're just pushing what pays the biggest commissions up front. And it's just, I put it in here just for you guys to read the push that they're doing for their representatives, and the push to outside registered registered investment advisor companies. Would I ever put you guys into something like this? Probably never in my lifetime, but it would pay me really good. I could make 3.5 to 3.75% putting you into a bond fund, because it's scary out there in the market, and get my 1% management fee on the side. So welcome to Vanguard being the cheapest to screw you in what's really best for your money and the growth opportunities that are in front of you. All right, with that said, what questions do you guys have? What questions can I answer for you? And yes, David, I will remember that one. Good question, but let me go ahead and put it in here. David asked me earlier, will we continue to follow Meta at the outrageous multiples? And the short answer is yes. And we will do a January 25 probably a 720, 800 option spread. So, and that's going to be a call option spread. So the short answer is, instead of buying the stock for $702, we will spend 31, try to spend 31 to make the next 80. We're looking for 160% return. We've done ridiculously well on them as of right now. So the short answer, David, is yes. We will continue to follow Meta higher. We're not going to be doing a buying more shares or what have you. We're just going to be using that stock replacement strategy and spend 31 to make the next 80. For all of you that have been in these spreads, we closed a couple out, but we've got 5 or 6 spreads that we're looking at making the maximum profit minus 50 cents or minus a quarter. The next batch comes through, I believe, in April, where we'll make either the $50 or the $70 spread minus that 50 cents to a quarter. And it was one of those, again, that we're looking at booking roughly, we will book roughly a 166% return on investment. For every $100 you put in, we're giving you back the $100 and making an additional 166. So that's what we're looking for, and that's what your other spreads are going to do. Good question, David, and thank you for the reminder. Any other questions you guys have? Thank you, Abraham. If you guys don't have any other questions, welcome, Tanya, to our Monday evening. Let's go over what's happening. Where are we going? What have we done that's working? What are we going to do in the future that's not working? But any other questions you guys have? Let me check to see if I missed a question earlier. Reason compromise is there's no tariffs in place. Hard to blame tariffs. Agreed. Mob shakedown. Yes, in fact, it's kind of funny. The Canadian government said, hey, maybe we can use drones and use the military to stop fentanyl trucks coming across the border, which I kind of giggled. And I was thinking, well, we could do the same thing and we're tempted, but what are you going to start doing? Bombing trucks that you think are full of fentanyl as they come across the border? Can't wait to see those fireworks. All right. If there are no other questions, guys, have a wonderful evening. This will be posted on the myhurleyinvestment.com website. Glad to have you guys all here. Glad to be able to show what we're doing to protect your money. Some of you, if you didn't have NVIDIA shares and Micron shares, those seem to be the accounts that were down today, not quite as much as the market at a negative 0.76. And then those of you that only had one of those two in your account, you were basically up for today. So we were up about 55% accounts were positive today. The other accounts that were down were about 45% of the accounts were down on average 0.4. So we beat the market somewhat handily today, and net we were above. So, all right, guys, pleasure having you here. Tanya, thank you for showing up for the first time. I'll see all you guys next week. We'll be broadcasting from Houston, Texas. And guys, have a wonderful week. Appreciate you being here. Good night, everyone.